Hello and welcome. My name is Brian Caplen. I'm editor of The Banker. I'm here with Patrick Jenkins, who's the financial editor for the Financial Times, and we're discussing the global outlook for banks. Key question, which is where are banks going to earn a crust from going ahead, right? So, I mean, if they're losing the customer-facing bit on the retail side and some of the, more sexy stuff from the wholesale side to the boutiques and hedge funds, where are they going to make some money? Do they have some business models or some tricks up their sleeves? Because they certainly haven't been earning good returns on equity over the last couple of years.
Well, my rather dystopian vision is of a far smaller banking sector. I'm sure most people would disagree with that prophecy, but partly because if you look back over the past decades and centuries, banks have always grown, the system has always grown. But I do think that we're at a potentially pretty powerful turning point because for all of these reasons, as you say, the challenges in the market, the failure really to invest by banks over the past, in the run-up to the crisis because they didn't need to, because they were riding a wave, the post-crisis era because they just haven't had the money to invest, and therefore so they've kind of made things more difficult for themselves. There's obviously the regulation as well. So many reasons why banks are under pressure, and actually the only way for them to prosper potentially is to shrink back to what they're best at and what they can do uniquely, which is all the regulated stuff and potentially all the back office pipework stuff. Now that makes them far more like utilities than they've ever been before. As you say, it doesn't generate huge profits, so returns on equity are never going to get back to the kinds of 20% plus numbers that we saw probably in an unhealthy way pre-crisis. But then the question, of course, is whether banks like that are going to be sufficiently attractive for investors to put money into. I suppose if they are super safe, then maybe they will be attractive to certain types of investors.
Now, the thing is, the outlook for the banks may not be good, but there's still plenty of exciting things happening in banking. So we're starting to see people corner different parts of the market. So peer-to-peer lending and the remittance business has lots of new players, and we're seeing digital-only banks and mobile phone banks. So there's lots of action happening, isn't it? So, what are the impacts of these people going to be on the banks? Are they actually going to buy the banks and start doing the business themselves, or are the banks going to buy them? Or are we still going to have this sort of, unequal relationship where they cream off the profits on the customers and the banks, as you've just described it, become the utilities?
I don't think there's many challenges to the traditional banks that would want to buy a bank. If, as we say, it's going to be a lower profit business in future, why would they buy them if they don't need to? They can just use them as counterparties. I don't think the banks, most of them anyway, would be strong enough to buy, if we're talking about big tech companies, for example. I think we will see some deals, either joint ventures or potential acquisitions around some of the peer-to-peer lenders and so on. We've already seen a few of those types of deals. But it'll be fascinating to see how the new landscape does map out, actually, because everything's up for grabs.
Okay. Now, we've focused a lot on Western Europe and North America, but clearly there are emerging markets out there that are doing well, and Asia's particularly strong. And we're also, parallel to that, to the sort of dislocation of the world economy, we've also seen a sort of deglobalization of banking itself anyway, with different sets of rules being applied in places. Whereas before the crisis, we were seeing very much more of a global picture. So what's the sum total of that now? Are we going to get some sort of strong regional players with their own rules and their own business models and a rather more balkanized banking system?
I think that's absolutely right. I think if you go back, just looking at let's say, the global corporate and retail banking sphere, where pre-crisis you had three massive players in Asia, let's say. So just take that as an example. HSBC, Citigroup and Standard Chartered were the dominant players. They're still pretty big there, of course, but what you have seen is in a market like Singapore, for example, a bank such as DBS has taken huge share from the local rivals, partly because those global players have retrenched in some areas, but partly because they haven't been subjected to quite the severity of regulatory attention, or in fact they're not global SIFIs, so they don't have to comply with these higher level of global capital requirements. So that has helped these chunky regional players build up. So we are seeing that's one big trend. And as you say, the deglobalization point is a fascinating one, because we're seeing banks like HSBC and Citi, as I mentioned, shrinking back, just as virtually every other big Western bank is kind of shrinking back to some extent to focus on their core businesses. And that's coming at a time when we're getting a continued drive of globalization in terms of underlying corporates. So that's a tension that potentially hampers the progress of foreign trade and so on, unless, of course, those emerging local players themselves step into the breach, and that'll be a real important dynamic to watch.
Okay, thank you very much. Well, both Patrick and I will be chairing the FT Banking Summit on November the 26th in London. We'll have a wide array of CEOs and top regulators at that summit. It's for banking professionals, and we'll be discussing all the subjects we've discussed today.